Good morning, everybody, and this is your S&P 500 day trade setups for today. So, looking at the 8-hour, we are in an upward trend. It's in a messy upward trend. We have a grouping of, well, not grouping yet, but we're heading towards a grouping of the oscillators, getting to an area where you need to start be careful of any shorts you're holding, and you're looking for structure. There's a big bit of structure right here at 3899 or 3900. Now, if we just check this on the daily, you can see we have a separation of the oscillators, we have a crossover of the moving averages, and we're just above and below the 155. So we are really confused at the moment. This is a big 4% confusion range, but there is something brewing. And if you look at the weekly, we are rejecting the moving averages here, and every time we've done it, have a look, move down, retrace, rejection, big move down, move up, big rejection, move down. Look what's forming here, big engulfing bar. Okay, so then this flag could very well be verified. So there is a bearish case here for the weekly to continue down, and that would take us down to 33.86 at the moment. But that's weekly, so we need to wait till Friday for that to verify. So until then, we are looking at intraday, and we take our lead off what the structure looks like on the daily. So 8-hour trend is still up. 3-hour trend is starting to change. We're below the 155. We have a crossover, but we have a grouping of the oscillators to the downside. So what this is telling me is I need to look for a pullback onto a level for a rejection. Now, this 4,000 area, as I said yesterday, is critical. You've also got this 39.87, 39.90 area, which is critical. And then you also have a clear break and close. That's 39.59, but that is, we got below the 39.50 area as well. And if you look left, you can see there is a lot going on in this area. So you see that 39.42, look at that there. That is a pin bar off a level. So not quite the level I'm looking at. I would rather say that was the level there, and that would give me a pin bar below it. So two ways of looking at it. But I think with a pin bar, and whichever way you look at the level, with the oscillators grouped to the downside, I'd be cautious of chasing shorts just yet. Well, not down here anyway. So, with the macro view embedded in our brains, what would the most logical entry be here? Look at the hour. We've got a separation of the oscillators firstly, and we're heading up quite quickly with the faster moving ones, starting to look like a bit of a flag. If we take both those levels as gospel, look at the hourly, we didn't get a rejection of it. The 3-hour, we got one, we got a pin bar on, but on the 1-hour, definitely no structure here. So I expect us to come back to this area, or to reject this area for a move down. Ideally for me, I want to see a pullback to 39.90, but this 39.60, 39.50 area is definitely something we need to pay attention to now. I just want to get down to the 15-minute for this. 4,000 is obviously something we need to pay attention to on the weekly. And that zone up there is still an area for a rejection as well. If you look at the moving averages, we're below them. We've got another grouping on the 15-minute here. So I have a feeling we're probably going to have a continuation to the downside, but just looking at the higher time frames, I would be a little bit cautious of chasing the shorts at the moment. Up here in the 4,000 area, or 39.95, 34,000, 39.87 area, see there's some structure here. That if I get a rejection up here, that's definitely an indication I need to look for shorts. This 39.59 area is critical right now. So if we reject this, there's also a fairly decent chance that we are moving down to 3900. So it does move in 50-point increments at the moment. So you sort of reject the round number, then you go to the 50-point, and then you sort of hover around. See, this is the round number 4,000 where we hover. Then we drop and now we're up in the 50-point area. Now we sort of hover, and then it's either a case of build a base up or build a base down. So that's kind of my view at the moment. I'd be watching this area. I'm not too comfortable with 3960 as a short. I'd be much more comfortable with 4000 as a short, as I said yesterday. But I'd be willing to take this if we see price action here. Just keep your stop just above the price action when you see that rejection. And I'd probably advise you to get down to a 5-minute chart so you can see the 5-minute structure. Reason for that, if you take anything here, just take this tweezer top here, or this double rejection here. So if I get in below that and I have a stop up there, see my stop loss is 90 points. My risk is 400 points. Oh, sorry, my gain is 400 points. My risk is 90 points. That's the only reason why I'd be looking at this on the 5 minutes. Okay, but please be wary of the, not so much the hour. Hour is a downward trend. The 3 hour is not a confirmed downward trend just yet. And then obviously the 8 hour is an upward trend. So you've got a lot of confusion here. So be careful. Could actually just build a base off here and bounce to the top, because there's going to be a lot of day traders that are going to be trading exactly the same structure I've just given you here, looking for rejection here, fail, and then look for rejection here. And you could have people that are buying, and then they're just looking to push it above just to get the stops and then break out. Okay, so that's kind of my view at the moment. Keep those stops tight, keep the position size small, and you should get 1 or 2 decent trades today as well. Probably to the short side. If it is going to move to the upside, it'll probably only be late in the session. I don't think there's any catalyst this morning that's going to drive it. Hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.